Hello, I'm Carolyn Herbert from the Finance News Network, and I'm thrilled to be joined here in Hong Kong by expert trader, fund manager and author Ray Barros, whose fund returned an average of 39% compounded annually over 17 years. Ray, welcome to FNN and thanks very much for joining us.
Well, thank you, Caroline. Lovely being here.
Ray, you started your trading career more than 2 decades ago. It wasn't always a smooth journey. Can you tell us about it?
Anything but smooth. Okay, I first started trading when I was at uni. I got into uni in 1966. First year, it was the Poseidon. You're probably too young to remember that. It was the Poseidon boom, and I lost all my savings in trading, so I gave that away. And I started trading again probably around 1979. My father-in-law got me down to Hong Kong and started trading the gold market. It's very small. Gold was trading a tight range in those days. And I thought, God, I sell the top, buy the bottom, make a fortune. In fact, I was supposed to be there for 2 weeks, and I was there for 6 weeks, and made enough money to buy my wife a fur coat. Kept 30%, lost it all promptly because gold broke up. I didn't tell her that. And we were finishing that after I bought her the fur coat. I said, what I'd like to do is sell the legal practice and become a trader. So I did that. And 7 years of losses and more, I think 7.5. 750,000 I lost until 1987. So that was 1980 to 87. And in 1987, I had my first winning year. Yeah, so it wasn't smooth.
So Ray, what was the main lesson you learnt from taking all of those losses?
It's hard to say because it wasn't just one lesson, but one memory stands out in my mind where I stopped blowing the account. I kept blowing up my account. Blowing means I lost all the capital. And I remember I just lost $50,000. And I went to, Chrissy in those days was funding me. So she'd bring money through the door and I'd throw it out the window. And well, that time, I went to her and said, I've lost the $50,000 again for the umpteenth time. And I said, just help me, just once more. I promise, just once more. I won't do it again. And she gave me $25,000. And I was trading the S&Ps. Day trading in those days, and S&Ps in those days usually had about a 7 or 8 point range. Well, that Friday night it had a 3 point range. I bought every high and I sold every low, and by the time the evening was over, I'd blown the 25,000, and I was sobbing. I was literally crying, and she used to live. I was trading in the library and with 2-bedroom apartment in Market Street in Sydney. And she said she heard me crying, so she knew that I'd done it again, and she didn't know whether to come in and console me or to take a knife and chop my head off. That she told me this many years later, my dad. But that was the last time I blew the account. I think if I've learned something, it's we have to be comfortable with discomfort, because traders, human beings hate loss. Whatever we define as pain and loss, losing money is one of them. We have to be comfortable with the fact that we are likely to lose money. And I think that's what causes people not to take losses quickly.
So from all of those losses at the beginning, how did you become profitable?
Well, you pick up the lessons, you pick up the knowledge, and then you pick up the skill. But my first profitable year was 1987, and that was really more good luck than good management. I happened to be short Black Friday, and of course Monday the markets totally collapsed, so 1987 by definition turned out to be a good year. But I learned something from there somewhere along the way. I started managing my risk much better. I did a course with a guy called Peter Stedelmeyer called Market Profile. That helped me a lot. And then slowly I started to understand that I'm not out there for the big dollars. I started making 10 and 15 and 20% per annum, which is a really reasonable return. And then my broker in 1980 suggested to me that I should start managing funds, because that was about the only way I was going to recover the $750,000 I lost. I said, that's probably right. And so I did, but I didn't like running around, going to the events, asking for CPOs for money, because they were after the established traders. We were beginners. They didn't want to know us. I was very lucky. I had a wife who had a very wealthy family. I had a father who was well known in Hong Kong. So together we raised 20 mil. And from that 20 mil, 2010, when I closed the private limited hedge fund, it was 943. So it was good. We had a couple of intervening years where we didn't make too much money. In fact, we lost, but that was fine. People stayed with me. So that was the profitable times.
And what would you say is the biggest mistake that people make when either trading or investing in financial markets?
Yeah, I think the biggest problem is that they don't predefine their loss. They don't know exactly at what point they're going to say, beyond this point, I'm not going to lose anymore. And I've seen so many of my friends make a lot of money and then lose it all and more because they let a loss grow out of hand. So I think that's the biggest mistake, not knowing when to get out and how much you're prepared to lose on any single trade.
So from your own experience, what do you find most challenging about trading?
I think it's what I mentioned before. You have to be uncomfortable. You have to be comfortable with the discomfort. You have to know when you get into a trade, there is a possibility you're going to lose money, and that if it gets to that level, you have to cut the trade. And that is the most challenging thing. As human beings, we follow pleasure, we avoid pain, and we follow pleasure, right? And so when we say, I'm going to take the pain, people find that difficult, and I still find it extremely difficult. You do it because you know what the results will be if you don't, but that is difficult.
And what do you love most about it? Oh,
you're your own man. Think about it. You set your own times. In Hong Kong, we don't pay tax if you set it up properly. You can't blame anybody for your success or failure except yourself. And that's what I've been brought up to believe in.
And Ray, looking at global financial markets more generally, what's your opinion on market sentiment at the moment? And how does that come into play when either investing in or trading financial markets?
When you say markets, let's talk about stocks, because I think they're going to be a driver of things to come. You've got foreign exchange and metals and so on, but stocks. I think stocks are in a precarious point, and my background here in economics is Austrian economics. And what we're seeing is that there's been a lot of money that's been printed. It hasn't hit Main Street because the Federal Reserve is actually paying interest on monies deposited with the St. Louis Fed Reserve. So they're not seeing their inflation rate go up because the money's not getting to Main Street. When and if that money starts to get to Main Street, inflation's going to rise dramatically, and they're going to have to raise interest rates more quickly than they're anticipating. That, I think, is the biggest single risk. So if the stock market in the US starts to collapse quickly, let's say 1987 type, you're going to see the rest of the world follow. So that, I think, is the biggest challenge we're facing.
And finally, Ray, if you could give one piece of advice to those wanting to succeed in trading financial markets, what would that be?
Okay. No such thing as a free lunch. Trading is the hardest profession in the world. You have to acquire the knowledge, which means the theoretical knowledge, and then you have to apply that knowledge. And as I said, applying that knowledge is probably more difficult than any other profession because you're fighting your emotions. So my advice would be, get the knowledge, get the skills, start small, be prepared to work.
Ray Barros, thank you very much for your insights. It's been an absolute pleasure.
Thank you so much for having me, Caroline. Really appreciate it.